What's going on, traders? This is Stephen Place with Precision Volume Alerts, and we had a lot of questions come in after the video I sent out on this past Monday saying basically that the durable low is in for at least for now, right? We don't know if it's going to be a retest, but I had a lot of folks reaching out and say, okay, now that we've bounced, when can we short? When can we get bearish this market? And that tends to happen, right? When we see a swift 10% sell-off in the indices, all right, which was hiding a lot of the bloodbath underneath the surface in high beta tech and momentum stocks and things like that. A lot of people are looking for that first bounce to reload to the short side. It's hard. It's a very difficult kind of trade to make, especially on a swing basis. So I'm going to show you three things that I am looking for right now in order to short this market aggressively. So let's hop over to the S&P really quick, and I want to show you some of the pitfalls involved. Okay. So first off, the energy of the rally after a strong move to the downside tends to be proportionate to the magnitude of the sell-off. So what that means basically of bear markets are when you see the hardest rallies, right? And if you see a 3% sell-off, you're probably going to see a 1 to 2% bounce. If you see a 10% sell-off, you're going to see a 5% move to the upside very quickly. And I think we've seen that already. So the first folks, we're up 8, almost 9% on the NASDAQ from the most recent lows from last week. So if you tried to short yesterday, you probably got run over. If you tried to short this morning, you probably got stuck as well. So a lot of people, especially on the first bounce, tend to underestimate how far and how fast things can go, because we had a lot of deleveraging happen. We had a lot of folks who blew out of their positions, especially on the institutional side. We saw it with all the volume that came in and all the capitulation and all evidence that pointed to that. And so we may not have as many ready and willing sellers because they already sold. And on the options market side, the VIX traded up into the 30s. The VIVIX traded up to 160, 170. And so those who needed to hedge, they already have hedged. So you don't get that kind of downside pressure again. So you just have to keep that in mind. Understand that the distance we can travel back to the upside can shock you. And I know this because, look, I've done it before where that first bounce and I go off and I sell some call spreads in the options market, then I get completely run over, right? So that mechanic happens all the time in the market. Go back. You can go and you can research this. Just do it subjectively. Go from the great financial crisis on. There's about 10 good market corrections to study, and you can see the amount of the retracement from the swing high to swing low tends to be about half or 2/3. So if you want to do Fibonacci analysis, that's one way to do it. What we do is inside the context of our roadmap. So what I want to see here are the obvious levels that everyone's looking at. And then I want to ask myself, if I were to short into that level, where would I place my stops? Okay, so if I were aggressively shorting the futures market or stocks or things like that, where would I say, okay, I'm going to cry uncle and get out? Because odds are that is going to be a better opportunity for you. So we can go and we can look at the S&P, right? And the spiders are trading into a very, very obvious short level, right? We have, let me see if I can throw some arrows on here. We have prior resistance right here. We have, prior support, which is now potential resistance. We have that test again. We have the swing anchored VWAP from the all-time highs, which we've already overtaken, but it's pretty close to that level. We've got the declining 20 EMA, and we've got a pretty clear low volume node, an LVN, coming right into play. It's a very obvious level. I think a lot of eyeballs are on this. I think a lot of folks are trying to not necessarily buy puts because puts are expensive, but maybe sell call spreads, offload positioning, expecting that those shorts are the sellers are going to show up. But if all the sellers already blew out, there's no one there at that price to sell. So I'm looking at this and I say, okay, if I get in this, where would I place my stop? Well, a very, very wide stop would be against the most recent pivot high right here. Okay. Where I say, okay, look, if we take out that level, odds are, we're going to squeeze even higher. So that would be, that's a stretch. Odds are we're not going to hit that overnight, but we could see something where, we come into resistance, we find some sellers, but we don't really get any follow through to the downside. And then we get that second squeeze. And that's going to be a better place to start offloading risk or start shorting into that kind of idea. There's also another level that's a little bit more of an aggressive short level that's going to, and I'll just throw a line on it. So this is the LVN that coincides with the swing highs from the fall of 2021. And that's going to be right about here. And it's going to line up with this LVN right here. So right now, look, you got a lot of people, they're coming in, a lot of traders into that move yesterday. Said, oh, I'm going to short the swing AVWAP right there. They get stopped out. We see a little bit of a dip today, but look at how price action traded into that move, right? This right here was such a tiny pullback and just basically not a very valid kind of signal if you want to say, hey, we're looking for confirmation to the downside right here. We're just simply not seeing it. We could do the same thing on the Russell 2000 index, albeit it's a little bit higher. There's a very clear level right around 210, 211 on the Russell 2000 that if we were to rally up into that, and it's going to require a little bit more energy for the Russell to do that. We may see more sideways action. We may see more back and forth. But if we were to do that, everyone's going to get bared up into it. And it might work, that level might work, but what we've seen recently is that the clean levels are too obvious, and then we'll see a stop run into it, and that's going to be a better, more durable short entry with really good prices. You could even take it to the NASDAQ, right, where we have, and this level I've pointed out a couple times now, where we've got this LVN, we've got these local swing AVWAPs, and a lot of folks are going to be looking at that level, and there's probably going to be a better entry higher because it will be a very crowded short. Now, I could be completely wrong, right? We could find some resistance. We completely fall out of bed and immediately retest the lows within the next 2 weeks. For me, that is a lower odds proposition. Just go back and look at all the major market corrections. All right. The only V bottoms we saw were Oct 2014 with the Ebola crisis and March 2020 with that crisis. I don't want to trigger any keywords. There has been a tendency to retest the lows, but it usually takes a month. And the reason for that, options expiration cycle. You got to get some of those hedges to burn off. You got to get some of the VIX readings back down. You got to get the VIX readings back down and so on. So it's just going to take more time. And so you will get a better short entry when enough leverage shorts get stopped out and then no one wants to do it anymore because everyone bought puts and then the puts didn't work and maybe they tried again and that one was a loser. Once we get to the point where everyone's like, screw it, I'm out, that's going to be a better way to play. And we can see that reflected in our roadmap where we have that obvious short level. And then above it, right around 377 to 380 is a much better short level, I think, if we were to get that in short order. Okay. One more thing, and this is related to options, because I mentioned this a little bit, how a lot of people are probably not buying puts. They're selling calls and things like that. You have to make sure that the juice is worth the squeeze, that if you are going to put on an aggressive directional position, you have to ask yourself, where is the market most likely to go if I'm going to win? And where am I wrong? And you have to figure out that risk reward. Okay. Now, if you're just doing straight stock or you're doing leveraged ETFs, that's one thing. If you're doing options, that makes it a little bit more difficult of a case to make because the VIX, all things considered, we've seen a nice move to the downside from 35 to 25, but 25 is still very rich, right? So if you buy an index put and the market does sell off, what will happen is that you will not get as much convexity as you think because the option premiums are so high. You're not going to get a lot of gamma. You do run the risk of, as the market, and this is super advanced stuff, as the market sells off, the option strike on the volatility curve shifts down. And so you actually lose a little bit of money from the changes in implied volatility, which is Vega. And so it becomes a little bit more difficult to do. So you just have to make sure that if you're going to be buying index puts or if you're going to be putting on hedges, that the price you are willing to pay makes sense. that you're saying, okay, these options are now underpriced relative to the downside volatility because either the implied volatility got low enough to justify that, or we have seen enough of a squeeze to the upside to say, you know what, the odds of a rug pull are very high right now. Okay, so keep all of that in mind. If you would like to learn more about this roadmap, and if you would like to be alerted for when I think the best short opportunities are especially in large cap indices right now, I highly recommend go watching our training, our Precision Volume Alerts webinar, where you can see why we take these kinds of trades, how we structure with the options market, the kinds of results you can get with a lot of case studies. And at the end, you can sign up and become a member and a client at Precision Volume Alerts, where you will get all of my trade setups sent to you via email and SMS. That's all I got for now. Thanks so much for watching. Have a great day.